This is the Used Car Dealer Podcast.
Hello, Zach here, and we have an awesome guest on the podcast today, very timely, Jeremy Robb, who is a Senior Director of Economic and Industry Insights at Cox Automotive, and we're going to be talking about what's going on in the used car marketplace in 2024. Jeremy, thanks so much for joining me on the podcast today.
Absolutely, Zach. Great to be here. I'm happy to join you today.
So as an icebreaker, could you share with us the journey getting into the automotive industry and what sparked your interest in this field?
Absolutely. It has been a zigzag, not a straight line, if you will. You know, I started my career off, I have a degree in economics, and I worked in the financial services world for the first part of my career. And then in 2010, I ended up working for a subprime automobile insurance company, which was really interesting, looking at, you know, how people went about and got insurance in the subprime world for automotive products. And then I got a call from Nissan asking me if I would come join there, I guess, in 2012 now. So I worked at Nissan for about 7 years. Ended up as the head of finance for NMAC, or Nissan's captive finance company in the United States. And then my last role there, I ran remarketing for Nissan and Infiniti in the US and Canada, selling, you know, all the off-lease product, repossessions, corporate vehicles, and things like that. And in that role, I was introduced to Manheim and Cox Automotive, and I learned that I really liked the used car business, that it was really dynamic and super interesting, and you know, not as incentive driven, and it's a lot larger, right, than the new car market overall. And some people that I had worked with pretty closely had moved over to Cox, and they talked to me for a while and said, you know, you should really think about coming and working here. And I joined Cox almost 6 years ago. And most of my time that I've spent there, I've been working in kind of consulting roles for clients and our internal, you know, executive teams and our finance team, strategy team, kind of pulling all together all of the experience and expertise I have in the automotive space, and tying that together with our business units that we have, and trying to build interesting stuff that happens and we look at in the industry.
That's really exciting. It sounds like you've touched so many different parts of the used car marketplace in your background. And if we were to look at 2023, what were some of the most unexpected developments you observed in the automotive market, and how did they compare to your initial predictions?
Yeah, it's a good comment. You know, 2023, I talked about it publicly a lot in what I said, and people, and I kind of called it the year of volatility. And I say volatility, I mean that on both the upside and the downside. Volatility doesn't necessarily have to mean just it's negative. It just, things happen differently than what you thought was going to happen. You know, we started the year out, when we ended 2022, used retail dealers, their inventory was pretty low. Sales started off strong in early 2023. And, you know, when sales start off strong and dealers aren't quite prepared for that, they come to the auction and they start bidding on cars, and that pushes prices up, and prices went higher than we thought they were going to, faster in the year than they would. And then as we moved throughout the year, you know, we kind of got into the summer and things started going down a little bit more than we thought. And we had some more ebbs and flows as the years went on. So volatility was really one of the things that happened out there that we weren't really, you know, expecting as much of. I would say too, another thing, look at the new vehicle marketplace. You know, new vehicle supply continued to grow in 2023, and we actually ended the year at levels of supply that we hadn't seen going back to kind of the earlier parts of 2021. And incentives came back too, and we all thought they would start to come back. But they were a little slow initially at first to come back. They ended the year up, you know, a lot higher than they had been a year ago. But, I don't want to misconstrue it. And new vehicle incentives, while they're higher than they were a year ago, they're still not where they were, kind of pre-pandemic levels over for the market overall. So that's an important part to make. And then lastly, I would just say, interest rates. We knew rates were higher when we ended 2022, but they continued to go higher, and they really didn't come back off of that until the latter, the last month of 2023. Is expectations that the Fed might cut rate in 2024 came on board, and just so important to the retail automotive space. There's tons of vehicles that are financed. It's second most valuable thing most people will buy other than a home. And so when rates are really high, and they're high relative to what people have been used to, that slows activity down. So rates were really kind of a chokehold on the marketplace and consumers last year.
Definitely agree. And you touched on volatility. And speaking of volatility, can you discuss the latest trends you've highlighted in the Manheim Market Insights series, especially in terms of used vehicle values?
Absolutely. Volatility, like that's where we see it when we're talking about values. We track values every week, for the market overall, by age, by segment, things like that. And we know, generally speaking, how those move and kind of why they move the way they do. So when we start to see, movements that are outside of what would be kind of normal before, piques our interest a little bit. So in September of this past year, with those UAW strikes, we got a little bit of a lull with used vehicle values, and they went, sideways for a bit before they started declining again. And we kind of expected they would decline again, and they did. But as we got into December, normally December flattens off a good bit for the year. Things slow down a little bit. There are some dealers that come out there, they start buying inventory, getting ready for the spring selling season early, take advantage of some of those prices. But we didn't see that. And that was 2 years in a row that we saw December be a bit weaker seasonally than what's normal. So that was something that was a little different too. One of the things, that we have to talk about, I think, and I bring up in some of the series, I say, is like, what is the new normal? We are talking about prices. What's normal? We're going to be more normal. Generally speaking, we're talking about 2019 and before. But, I think that normal is a relative term. And what we're looking at is to see things we think make more sense, because we're probably not going to get back exactly to where we were before that time period. One of the things, too, we were talking about a little bit before the show started, that come up a lot are used EV values, and we've talked a lot about what we call the waterfall impact and pricing effect, which basically means the new car sets the highest price in the marketplace on like a year, make, model valuation. And so that new car, if it goes up or down, it'll drag the 1-year-old, 2-year-old, 3-year-old along with it. And last year, when we saw new EV pricing changes, specifically for Tesla and a few others too, that has a real impact on wholesale and used vehicle values that are tied to that. And that was something that impacted the market but quite a bit last year.
So what role do you see data playing in the future of the auto industry decision making, and how does Cox help dealers leverage this data?
Yeah, there's a newer commercial out. I don't know if you've seen it. It's I think it's a Salesforce commercial, and I think Matthew McConaughey's in it. But
Yes,
a line in it, it's like data. Does that make data the new gold? I think that's truer now than ever before. We live in a world. There's big data. We talk about that. Executives, industries, clients, businesses. Everybody wants data. They want insights, and they want to use that to make decisions, and it makes total sense. We field constant questions about our data and how we use that, and how that's maybe different from others in the industry, or what people are saying, or clarifying questions about it. Because everybody's out there trying to make sense of all the data they have at their fingertips through the web or other business publications, and looking at that. But we talk to clients and people around the industry all the time. I think one of the things you have to think about with using data, and this is me coming from my role where I use a ton of it, right, is that, but on its own, data really isn't that useful. It's just a number, kind of telling you things. So you have to figure out how to apply the data and the business behind it, the business decisions that have gone in to give you that data point behind it to make the most sense of it. And that's where you really get a lot of leverage out of using data, is to understand, the business and the data combined and put those two together.
So given your background with companies like Nissan, Cox Automotive, how do you approach forecasting in such a dynamic sector, and especially recently with so many unprecedented market events?
Yeah, I would say it's hard. That would be the first answer, and I've learned from 20 years of experience in trying to do this in different industries is exercise some humility. There is something that can really be helpful. Another thing that can be helpful too is maybe, to work with some scenarios. So instead of saying, I think this is going to happen next year, I might say, well, the trend would say next year might do this, right? Well, let's create an upside scenario and a downside scenario to that. And then let's go talk about it with people that have informed, opinions about what's going on. And from there, you might say, okay, well, from a probability scenario, weighting system, I might apply more probability to this playing out than this one. But I'm kind of looking at, different things together to say, like, get myself and my business ready to, react to whatever might happen. On top of that, you got to know you can be wrong. When COVID first hit, one of the things I was supposed to do was look at like where lease returns may come in. And, I was totally wrong. I mean, I didn't think about or understand how important individual transportation was going to be to people, coupled with the fact that, vehicle production was highly curtailed, and what that would do to values and lease returns. And so, you can be off by a mile sometimes, especially in scenarios like that. So you start to kind of going through those, you step back and you look at like where the pendulum is, eventually it's going to swing back. But when it does, it doesn't always mean you're at the same place you were before. You may need to reevaluate and rethink. But both of the, Cox and Nissan are big companies. And so they just had troves of information that I could use. And we tried to do things like seasonalize impacts. That's an important part of business. It's really important in the automotive industry, used and new. They work a little bit differently, but you got to know that, and just try to see if there's real movement somewhere, if there's cause and effect, or if it's more from a seasonal standpoint. And really, always be putting in your brain, like, there's something physically out there that's making the data do this, right? And think of what that is, and try to peel the onion back to understand what that point is. And that really helps you, I think, make better decisions when you're looking into the future.
Very insightful. Speaking of insights, could you share your insights on how the recent economic climate is impacting auto loan defaults and repossessions?
Yeah, sure. That's a question that we get a lot at Cox, especially related to repos and things like that. And I field. So, the overall economy has definitely slowed down in the past 2 years, but it still has positive growth out there. So, we're seeing some real impacts from that slowdown. And then there's also a lot of worry about what could happen, and we've been going through that worry, I would say, for 2.5 years now, about what could happen from the post-pandemic highs. When you think about auto loan defaults and repossessions, a lot of what you need to think about is like, well, what type of equity is in a vehicle loan? And we have some analytics that we use that measures that specifically. But when we look at what happened in 2022, you think about in 2021, we had really high vehicle appreciation. And so consumers went out there, if they purchased a used vehicle in 2021, they were paying a higher, amount for that vehicle, but their interest rate was lower. However, we got to the second half of 2022, values dropped a lot every week in 2022. And in 2023, values dropped again in 2023, not as much as they did in 2022, but more than what we would see in a normal year. So those value declines, that really pushes down the collateral on a car loan. It's putting consumers in a more negative equity position. Once that occurs, those loans could definitely move into a default or repo a little bit more. And higher interest rates too. A lot of people don't think about this, but it actually does push out the amortization of a loan a little bit more. Not a ton. It's about 6 months, kind of what I've modeled. But what we see, you think about it, a repo default, a lot of times that happens in the first, 18 to 24 months of a loan, right? So that matters earlier in the life of the loan. But on the other hand, there's still positive job growth. The unemployment rate is still very low for the economy as a whole. That means people have income regularly. And if they have a job and they have income, they're going to want to keep that car to keep getting them to work. And that's a positive thing. And so that's kind of a counter that keeps maybe defaults and repossessions from not really going back as high as what a lot of people have thought over the past year or so.
So in your view, how is the increasing focus on EVs more broadly affecting the traditional used car market?
It's a good question. EVs are, I think in my role, it takes up 30 or 40% of all the questions we get are around EVs. And it's so dynamic, new car to used car EVs and how they relate with ICE vehicles. When you think about technology, vehicles have had advancing technology for years. And a lot of technology impacts the value of what the car is, but I think there's some nuance to that. You think about something like a safety camera, right? When that came out, when a safety camera was first put into a new vehicle, and that tech, did it make that car more valuable then? Or did it decrease the value of other units that were older and they didn't have that technology in them? And I think that's the thought process that we have to go through kind of with EV and the tech and the battery and measuring battery health that we have. There are tools out there that help us measure battery health and provide that information. And information is always going to be welcome from a consumer and for a seller too. It's going to make consumers more confident in bidding. It's going to make sellers more confident in selling, a unit versus one that doesn't have that kind of background to it. And so you have to think about having that information and the data that's provided there. And if you have it right, it probably makes your transaction or your vehicle more valuable than the ones that don't have it. And so I always advise our clients that we work with, if we can get this and share battery health kind of out there for clients, industry, for consumers, I think that's going to have a big impact on not only like adoption, but peace of mind, right, for people too, and definitely help facilitate the buying and selling of EVs.
And Jeremy, can you provide any advice for used car dealers on how they could optimize their inventory and manage customer price expectations in today's market?
Sure. Dealers are smart. They're, entrepreneurial. They're always looking to do what they can. And in my world, we use a lot of software and tools like that. And I would say that's one of the biggest thing a dealer can do is to be smart. There are tools that are developed that will help you sell better and help customers out. And if you use them, that's going to be to your advantage. We have a host of those products at Cox. Many of them are pretty well known. They're designed to increase the turn rate and throughput. They may lower your cost of acquisition, help maximize margins, and specifically help out dealers. One example of that is our Profit Time GPS product. It's a velocity management tool that we have. It takes core fundamentals of selling cars and helps to achieve a better ROI for dealers. And I think that's something that, that would help not only the salesperson, the dealership itself, and it helps you manage the whole, portfolio of vehicles you have at your dealership. And then finally, I would say, listen to consumers. They have more information than they've ever had before researching it. A lot of times they have an idea of what they really want. The people that work at dealerships, they're there to help sell and also facilitate those transactions. And so the more they can solve for the wants and needs of a consumer, really the better off everybody's going to be from that.
And as we gear up for 2024, based on the current economic indicators and market dynamics, what predictions can you share with us on the trajectory of the used car marketplace?
Yeah, 2023 was a bit more normal overall, what we saw in the industry, especially relative to 2021 and 2022. And we expect more of that this year in 2024. It's not going to be what it was back in 2019 in our pre-pandemic normals, but we're moving in the right direction. One of the things I would say to really keep your eye on, and as it relates to used, is what happens with new car inventory from OEMs. Over the past several years, they've really said they want to focus on right-sizing supply, even as they continue to grow back towards pre-pandemic levels. Not overly incentivize products, and then the question is, will they, right, or who will in that realm? I worked for an OEM. I worked actually in manufacturing finance for a while and kind of saw differences between the manufacturing side of the house and the sales side of the house, and there are big decisions that get made for all those OEMs. So you have to watch not just what they say, but what they're going to do. And if supply keeps growing, inventory is going to grow, and with that, incentives will grow too. And if incentives pick up, we will see an impact on the used vehicle value market.
Well said. And two-part question for my last question. So the first one's for the dealer audience, and what's one piece of advice you'd offer to dealers to navigate the challenges or potential challenges in 2024? And then the second part of the question is, as we look through the rest of the year, what are some key developments, conferences that Cox Automotive is going to be involved in that dealers should be excited about? I know, of course, NADA is upcoming as well.
Absolutely. On the first question about, navigating, I'd say be nimble. Our industry changes fast, the market moves fast. And one of the things that we really have to keep in our mind, and it may not be as apparent to everybody living it day to day, is that really used market supply is still relatively tight. That inventory level is not back to where it was before. The supply inputs have been curtailed from that lack of new vehicle sales over the last couple of years in production. And we're going to be living with that for the next several years. And when you have tighter markets and supply overall, things can happen fast. So be nimble. We look into 2024, Cox, we're going to be at all the big conferences, used car week, NADA, all of that, representing there. Happy to talk and share everything that we can with people. One of the things we continue to work on with Cox is automotive is a really large business, and it's made up of companies that are large businesses on their own. If you're talking about Manheim or DealerTrack or Kelley Blue Book or Auto Trader, and combining all of those under one roof takes time for the audience and internally, your resources to get to know that. And we've been working on becoming Cox Automotive and bringing ourselves to our dealers and our clients like that. And I think we're, closer than ever about that. And it provides more clarity to people that we work with. And we're actually able to solve a lot more problems than we we have in the past. So we're as focused as ever on innovation, keeping that alive. We know competition's always coming around the corner in the industry, and this is a really dynamic market, and it's a great market and an industry to be in. And we're happy to be there and to try to help clients along the way and solve as many problems as we can.
Very exciting, Jeremy. And I've learned so much on this podcast today, and you've really got me up to speed on what happened in 2023 in terms of the used car marketplace, and then some predictions and what's ahead for 2024. So great episode for our audience. Thanks, Jeremy, for coming on today.
Thanks, Zach. I appreciate you having me here.